Hey everybody, it's Ron from Ron's Basement. Thank you for joining me today. I have a question for you, my fellow precious metals mining investors. How much of an impact does the dollar or the dollar index, the DXY, how much of an impact does it really have on the price of precious metals? On a short term basis, on a long term basis? I'm getting, I'll tell you my opinion. I'm getting a little tired of hearing these, gurus talk about how, oh, the price of gold is, can't go up because there's a strong dollar and the price of silver is, being restrained by the strong dollar. And here's my thought on that. Sure, I think that it can definitely have an impact on a short term basis. However, on a long term basis, a longer term basis, I think it has actually moderate to very little impact at all. And the reason why is this. These indexes, the DXY, and I just read this, the DXY is made up of like, I don't know, a majority of it is the euro dollar relationship. These indexes, the DXY and the value of the dollar, that's all relative to other currencies. Well, guess what? The US dollar and the euro, all the other currencies, they're all printing a ton of money. So, on a relative basis, they can remain somewhat static to one another. However, they're all printing a bunch of money, which means that the price of real assets will inflate. And let me give you an extreme example. Let's do Ronnie Simple World, okay? There's only two currencies in Ronnie Simple World. There's the US dollar and the euro. If suddenly the European Central Bank and the Federal Reserve decided to print 10 times the amount of their currency, they decided that they were going to increase the number of dollars by 10 times, and the European Central Bank decided they were going to increase the number of euros by 10 times. Okay? On a relative basis, the currencies would remain the same. The index between them, the DXY, or the relationship between those currencies would remain the same because they both would have created 10 times as much simultaneously. However, the price of real assets would suddenly hyperinflate to compensate for the fact that there's now 10 times as many dollars and 10 times as many euros in the marketplace. Does that make sense to you? I mean, it's not the easiest concept to get, but I know that it's absolutely true. The dollar index under my extreme example would remain static. However, the price of assets would have to hyperinflate by about 10 times to compensate for all this extra currency, euros and dollars, would be floating around and have nowhere to go. So, yeah, sure, I understand. The value of the dollar on a short term basis can definitely have an impact. But when I hear people say, oh, gold and silver can't go up when the dollar's strong or the dollar's getting stronger, I don't buy that because with all this extra money printing that's been going on, and granted, it's not been 10 times, I know that, it's only been like 40% more in the last year. Uh, the price of gold and silver can go up and should go up, and hopefully on the long term will go up. Thanks for watching. I hope you found my video educational, maybe mildly entertaining, and I will talk to you soon.